Let's talk about the market broadly. Obviously, we've just been through, or still in the midst of, a nuclear economic winter. Compared to, say, a year ago, I'd like to ask the panelists to opine on what they're hearing in the market, what they're actually observing, whether it's actual investment opportunities, whether it's representing folks on the accounting or legal front. How would you characterize the marketplace? Is it all just a bunch of background noise, or are things really starting to happen for entrepreneurs looking to raise capital?
So I think the good news is money is starting to be put to work, right? And I'm talking about not just in sustaining the heartbeats of companies that we're already funded and just trying to make it through the tough times, but we're seeing, we're putting money to work. We're seeing other funds put money to work. I know you guys are, and on new deals, right? And oftentimes, in particularly right now, and adversity always breeds stronger companies. It's a bit of a Darwinian thing, and truly, some of the companies that have made it through by bootstrapping, by buckling down, controlling their burn rate, doing friends and family, or just frankly selling product and generating some revenue, are emerging as really interesting companies that for investment, right? So I think in particular right now, we're seeing sort of the benefit of some companies that have just gotten tough, and by virtue of that, some are succeeding and succeeding rather nicely. So it's a good opportunity time.
It's Darwinian's a very good way to state it. I think this time last year, everyone was in shock across the entire spectrum, from the largest public companies all the way down to the mom and pop startups, and nobody knew what the future held, and there was just paralysis. We saw that, and it lags a little bit, I would say 6 months. And so last fall, the deals we saw were not very good. The entrepreneurial spirit had seemed to be sucked out of at least the industry we looked at, because I still think people were in shock. Now, the good thing was you had, if you can say good thing, you had a mass kind of shredding of the fat, if you will, of the Fortune 500 companies, and you had a lot of talented executives leave positions because the companies that they were working for did not have the ability to sustain, their salaries, whatever. Now that spurned significant entrepreneurial activity, probably starting in the middle of the summer, which now has led to a stage where we're looking and we're seeing great opportunities come down the pipeline from experienced executives who have looked and been in this industry that we focus on, particularly see it as a dynamic time to be creating new opportunities for these behemoth firms that are trying to reinvent themselves, because they're facing the same thing. They went into scale down operations, let's survive, let's make sure we preserve our cash as much as possible. Hey, now we've done that, but what we've done is essentially cut our long-term growth aspects. So we've got to figure out a new way to reinvent ourselves as a large company. How do we do that? Well, we're not going to be natural innovators because we are a large company. So we have to look to entrepreneurs to provide us with that innovation. So I really think you're going to see a confluence now over the next 6 to 12 months of venture activity picking up, entrepreneurial activity picking up, and it's a good time to be in venture.
David, could you talk about how many term sheets you're looking at right now?
Well,
who the investors are that are cutting checks?
Well, I agree with. I agree. I would caution that it's still a real tight market. It's
no question.
It's tough it's tough out there, but the good companies are raising capital. We've seen deals that were the ugly deals with valuations that would have shocked your senses a year and a half, 2 years ago. To certainly more recent Q4, we started seeing a pickup in what I would consider kind of true valuations that weren't kind of desperate deals, last-ditch efforts. But I'd still describe it as less than robust. But there is money to be had. It's a full-time job to find it, but there is money out there.
And target your requests. Many people come to people like David and myself, who know that we know a lot of venture capitalists. Who can you introduce me to who will fund my company? I always say wrong question. You want to know who can fund your company, who knows your space, and is interested in your space. There's no point sending your plan, if you're a healthcare IT, to somebody who's doing only digital media. Okay, so you want to be very targeted, and you can find out who those funds are through the NVCA, National Venture Capital Association's website, through working with advisors. Two of the most commonly asked questions that venture capitalists, if I can speak for them, are going to want to know is revenue and management team experience. And if you don't have any management team experience, find some folks that you can build an advisory board around who are going to have those connections for you. And revenue, you got to have it.
Why selecting a good partner in terms of an accountant, a law firm, a bank, a real estate company is important to an entrepreneur's ultimate success?
Okay. Well, if you are an entrepreneur who hasn't done it before, if you don't have Greg's experience, who's run 3 or 4 other companies first, you want to have somebody who can guide you through what all of the issues are. It's the old, you don't know what you don't know, right? So you want to know, what do I need to know, and surround yourself with people who complement your skill set. An accountant may not have the technical expertise, the engineering expertise that you have, but they understand tax law, they understand how you're going to set up your books, how you're going to run your books. They understand people in the community who can open the doors for you. Okay, so it's connections, it's understanding what you don't know, and it's helping you practice. If we bring it back from big picture back to getting ready for Venture Atlanta, one of the things that we do is for all of our clients that are selected to present, we offer them a 2-hour coaching session. And they come into our office, and I've had many, many clients say to me, I don't know why you're making me come for 2 hours. My pitch is only, 8 minutes? Six minutes. So we can just do this in 15 minutes and I'm done. And at 2 hours, we're ready for round 2, okay? So sometimes it sounds like it's so easy that 6 minutes, how hard could it be? You can practice in front of your bathroom mirror, you can practice in front of your spouse, your dog, whatever, it's not gonna be that hard. It is hard, because what you've gotta do is get the right components into those 6 minutes that the people who are looking to write the checks for you are gonna be looking for. If you've never done this before, you don't know what those right components are. So that's why you want to partner with people who understand and who have done it before. If you guys come just to network and observe, you'll see a wide variety. But partnering with people who've been there before and can help guide you, I would say, would be the most important thing.
We refer to it as an ecosystem that you try to surround yourself with, the points of contact that can give you access to, whether it's venture capital, the credit world, the good accounting firms like Susan's, the introductions, all are very important. I think there's also a certain credibility component also that attaches to it. One thing that, from a legal standpoint, a pitfall that we see as venture capitalists or other investors come in, if things weren't done right by the time they get in there, that's going to cast a pall. It's going to raise suspicion. It's going to make them question other aspects, maybe related to the organizational documents and that type of thing. And so the cleaner you are from a legal and accounting perspective, the better off you're going to be as you present. And so you can take advantage of the network, but also from the expertise firms that tend to represent the types of companies that you're talking about that have that experience.
Let's just say for example purposes that the valuation and deal terms are materially the same. I'm the entrepreneur. Why do I choose one venture firm over the other? Glenn?
Yeah, so it's at the end of the day, it's a relationship business, right? It's a people business, and you should expect that you're going to be working with this person and his or her firm for years, right? It's not a quick thing. It's almost like getting into a marriage, and so the compatibility, the trust, in addition to what other experiences does that individual or his firm bring to my business, right? Have they built a business before? Have they built a business in my industry? Do they know people that can help me grow my business? So beyond the money, which is great when you get that, but when you have choices, you should be looking at things that are relevant, more personal to you and your business.
Sean?
Glenn hit the nail on the head. It is a relationship, and if you don't feel comfortable with the fund that is going to back you, even if, let's say, Dale, it's a different scenario, and they seem to be offering much more favorable terms, it is a marriage, and you're going to be with these folks for 5, 6, 7 years, and they're going to be directors looking over your shoulder as the entrepreneur, and they're going to be your senior investors in this deal. And if you all don't have a good foundation and footwork and understand how how you're going to interplay, it's not going to be happy. And while the deal up front might look better, you're probably going to end up needing more capital at some point. And if there's a divergence of opinion about who's doing a good job and who's not, then it's going to be a lot harder to maintain the portion of your company that you want to maintain. At the same time, because we focus exclusively on one industry, it's a little bit easier for us. We won't do a deal unless there's something we can bring to the table beyond just a check. And so I think as an entrepreneur, you should look at that too. If the venture fund that's coming in to back you, or the two of them, one of them offers something beyond just the check, that's the group you really should focus on. That's pretty much it.